Yeah, absolutely. I mean, financial markets are ever evolving. I think with that, as a trader, you need to evolve as well. You evolve or very simply die. I think you need to have different strategies or different solutions. Different markets require different strategies because they move so very differently. I mean, for example, if you trade foreign exchange, the forex market is very different in regards to the equity market, so the dynamics, right? And therefore, you need to have two different strategies to trade both markets. Now, where the forex market might be in anticipation for some sort of interest rate change or some sort of central bank change in regards to currency rates, the equity markets might be doing very well. And therefore, where the equities have a different dynamic, different strategy, it therefore means you have a potential solution to use in that evolving market. So I think to answer the question in regards to how a trader will need to evolve to the markets, you need to adjust to the market. The market won't adjust to you. That being said, understanding what strategy works very well, what strategies don't work very well in certain times of the markets before certain announcements, whether it be during news events, whether it be post-news events, during FOMC weeks. These are all the things you need to take into consideration, have an awareness of as a trader, and then make a decision around it. Yeah, it's a very good question. I think what we need to make sure we do is don't overcomplicate the process. Let's keep things very, very simple, right? Market dynamics are universally applicable to any market you trade, whether it be a commodity market, a metal market, FX market, equity market. The dynamics of why markets move technically are very, very similar. Although movement-wise, they're very complex and they do differ in terms of movement and speed. Why market reverses, going from phase 1 to phase 2. They're very similar across all financial markets, where a market ranges to breaks out. So although absolutely the tools in which you can use can be very complex, cot data, seasonals, pivot points, Elliott wave, but the simple stuff very much work as well. And I think sometimes we just got to keep things simple, understand the effectiveness of certain tools, and make sure we don't go down the spiral of analysis paralysis, where we use 100,000 tools just to understand the markets will reverse or not, right? That being said though, as you start to get more experience, you want to be able to not only anticipate the next move, but the move after that as well. One tool that works very well for that situation, where you're looking for, like I said, not just the move up, not just the next move, but the move after that one, is seasonality data. And I'll give you a very good example of where we are now, come towards the end of April into May into June, right? Seasonally, as we enter the new month, April into May, we do see seasonally for the last 20 years, the dollar does gain some strength, which is brilliant. That's something we can use in anticipation for that potential rally. But as we come towards the end of May, as we enter June, for example now, we see the dollar starts to weaken off. If we use this information and translate that to the chart, what we're seeing technically now is potentially another leg of dollar strength in line with the seasonality data that we're expecting in May. And after that seasonal push, we can then look for the dollar to weaken off, which will allow the equities to rally into the mid-quarter of the year. So that's a very good example of how we can use seasonality data in a complex, not so much a complex way, but if the objective is to find out, be 2 moves ahead of where you are now, that tool is a very effective tool to use for that objective. So to answer the question, yes, you have many tools and these tools have many utilities, absolutely. But I think we've got to make sure we stick to the basics, make sure we utilize the simple basic concepts of markets so we don't go to analysis paralysis. But at the same time, understand that these tools do have a purpose. But I think at the same time, just making sure you ask the right questions, right? If you're looking for the move after the next one, like I said, that example is a great example to use. Or if you're very simply looking for, right, where's this market going to reverse? What do I expect to see from price when we reverse? Look for your reversal patterns, head and shoulders, break of cycles, right? So there's many ways. It just depends on what you're trying to achieve. Absolutely. I think one mindset or one frame of mind I like to stick by, not just in training, but in general life really, is that you got to stay in control of what you're controlling, right? You got to live in the present. If you think about the future too much, you have this anxiety of trying to achieve targets or trying to achieve or trying to be somewhere where you may not be. Well, that's what gives you a bit of anxiety of the future. And if you live in your past too much, you're going to get depressed with the mistakes you've made, right? So I think if you focus on the future and stay where you are right now, this very moment in time, it gives you a sense of presence where the trade you potentially may take, you alone are in control of making that decision. Whether that be a winning trade or a losing trade, As long as you do what you're in control to the best of your ability, the markets will do what they do. So at the same time, so I think with that frame of mind, of course, go back at your previous trades, get a sense of what you can learn from that and utilize that for your future trading. But don't go too far in the future to say, right, if this is a winning trade, this is a winning trade, this is a winning trade, this means I can do this, that, this. Just focus on what you're in control of, and that will take you a long way. To answer the question where, I've had to utilize this myself, personally speaking. When you're in a run of losing trades or, things aren't going your way, you have to have a sense of understanding that that's part of the game. You're not going to have the 100% track record, no one does. You'd be surprised how much closer professional traders win to loss ratio is very much sort of 70-30 or even something 60-40, right? Very close to 50-50. But the point is, as long as your winners far outweigh your losing trades, you're going to be in profit moving forward, right? If you have a minimum risk to reward of 2-1, you can lose 2 trades, have one winning trade, and still be at 0. So you have more losers than winners, but you're at 0, right? So I think at the same time, utilizing emotional discipline as well as having the logical sense as well of what works, what doesn't work with risk management, I think that will take you a long way. Yeah, I think one aspect that's changed a lot of the perspective which I've taken personally when it comes to trading itself is very similar to the answer I've just given. We've got to keep things very simple. Stay in control of what you're in control of. Don't worry about anything else, right? And self-accountability, right? If you take a trade and it goes against you, but you find out that the strategy you've used isn't following the rules, or you're trading in an area which doesn't make sense to trade, it's not the market's fault, it's not the strategy's fault, it's your fault. So I think taking self-accountability in everything you do, the decisions you make, the analysis you do, the trades you've taken, the why you've closed that trade, every action you do, as long as you're keeping some sort of self-accountability, and a journal will help you with that. It will help you understand what you're very good at and what you're not good at. And that will help with your future trades moving forward. With all that being said, I think a different aspect and something that's definitely helped over the years as well is being in the environment of different traders. I sit next to, I've known James for almost half a decade now when I was learning myself, and just being in close proximity to him, just sort of seeing how he approaches markets, how he approaches trades, how he deals with certain situations. Me personally, I've learned through osmosis almost, right? And I think so it's a combination of intuition, of understanding how to do things, but at the same time having a collective community and network which you can bounce ideas off, right? You can't do anything by yourself alone. I think just having being around people, bouncing off ideas off one another, and just really just working towards a goal, collective goal of obviously trading full time. I think that's the way forward. So I think in terms of perspective changes and whatnot, it's having that logical understanding of how things work and having that resilience to keep going, right? As you keep progressing, you're going to make mistakes. You can learn from those mistakes and push yourself forward. Success is never a straight line, right? You never go from here to here. It's always one step forward, one step back, right? So to give up midway through, it doesn't make logical sense because you can't apply the new learnings you've learned from mistakes you made. So have that resilience to keep going, understanding what to do, and that experience from doing the right things, that will take you a very long way. So at Financial Markets Online, we offer a range of courses from an entry-level program. So if you're very bright, if you know absolutely nothing about trading, these entry-level programs will definitely help you, all the way to getting potentially funded and a portfolio manager with ourselves. These courses are designed to help you understand how markets work in a way where you can practically use it to be profitable. More information, give us a message or subscribe for more content like this.